Are you looking to grow your money but don't know where to start? Investing can feel overwhelming, but don't worry, we've got you covered. In this video, we'll break down everything you need to know to start your investing journey confidently. Investing is the process of putting your money into assets like stocks, real estate, or mutual funds with the expectation of growing it over time. Unlike saving, investing carries risks but offers higher potential returns. Key points: definition of investing, difference between saving and investing, importance of starting early. Why you should invest. Why invest? The answer is simple: financial freedom. Investing helps combat inflation, build wealth, and achieve long-term goals like buying a home or retiring comfortably. Key points: beat inflation, build wealth over time, achieve financial goals. Understanding different types of investments. There are many types of investments, each with its risks and rewards. Let's break down the most common options. Key points: stocks, ownership in a company, potential for high returns. Bonds, loans to governments or corporations, safer with steady returns. Mutual funds and ETFs, diversified investments managed by professionals. Real estate, buying properties for rental income or value appreciation. Cryptocurrency, high risk, high reward digital currency investments. Setting investment goals. Before you start investing, it's crucial to define your goals. Are you saving for retirement, building an emergency fund, or looking for short-term profits? Your goals will determine your strategy. Key points: SMART goals, specific, measurable, achievable, relevant, time-bound, short-term versus long-term goals, balancing risk with goals. How to start investing. Here's your step-by-step guide to start investing today. Steps: 1. Set up a budget. Ensure you have an emergency fund and no high-interest debt. 2. Choose an investment platform, apps like Robinhood, Fidelity, or Vanguard. 3. Understand your risk tolerance. Know how much risk you're comfortable taking. 4. Start small. Begin with as little as $10 to get the hang of it. 5. Diversify. Don't put all your eggs in one basket. Mistakes to avoid. Investing can be tricky, especially for beginners. Here are common mistakes to avoid. Key points: chasing trends or hot stocks. Investing without research, not diversifying your portfolio. Letting emotions drive decisions. The power of consistency. Investing isn't about timing the market, but time in the market. Consistent contributions, even small ones, can lead to big results. Key points: dollar cost averaging. Benefits of reinvesting dividends. Compound interest over the long term. Tools and resources. Use tools to simplify your investing journey. Key points: investment apps, Robinhood, Acorns, Fidelity, free financial literacy websites, books like The Intelligent Investor or Rich Dad, Poor Dad. Now that you have the basics, it's time to take action. Start small, stay consistent, and watch your money grow. Don't forget